Have you ever stood on the edge of a diving board, looking down at the water below, your heart racing as you decide whether to jump? That moment, right there, is a perfect metaphor for risk-taking. It's the split second where fear meets potential. The same feeling applies to financial risks, whether it's investing your savings in the stock market or starting a new business venture. We all want to land safely in the water, but sometimes it's the fear of the splash that holds us back. Think about it. Risk is all around us, but it's not always a bad thing. In fact, embracing risk can lead to some of life's greatest rewards. Take the Wright brothers, for instance. They risked everything on an idea that humans could fly. Their success didn't come because they were reckless. It came from taking calculated risks, understanding the forces at play, and making smart decisions. This is what I like to call the art of risk-taking. You see, risk isn't about jumping without looking. It's about assessing the situation, understanding what you stand to gain versus what you might lose, and making a decision that aligns with your long-term goals. This involves balancing fear and greed, two powerful emotions that can cloud our judgment. Fear can paralyze us, keeping us stuck and afraid to make a move, while greed might lead us to chase quick wins without considering the potential downfalls. In financial markets, for example, there are always those tempting high-risk, high-reward opportunities. But let me tell you a story about Amy, an investor who learned the importance of patience and understanding risk. Amy was new to investing and was drawn to volatile stocks that promised big profits. Initially, she made some quick gains, but she also experienced sharp losses. Amy then learned to spread her investments across different asset classes, which is a concept known as diversification, a simple yet effective way to manage risk by not putting all your eggs in one basket. And it's not just in investing. This principle applies to life in general. Think of risk like the spices in a recipe. A little can enhance the flavor, but too much can ruin the dish. It's about finding the right balance and knowing when to add a pinch more or when to hold back. In the context of money, it's about understanding your own risk tolerance, how much you can afford to lose both financially and emotionally without losing sleep. Some people have an appetite for risk, while others are more cautious. Neither approach is wrong. It's about finding what works for you. I like to use the mental model of a risk thermostat. Just like you set the temperature in your home, you can set your level of risk based on your circumstances and comfort level. As your financial situation changes, you can adjust the thermostat to match your new reality. It's crucial, however, to constantly educate yourself and adapt. Markets change, and so should your strategies. Keeping informed and learning from past experiences, both yours and others, is how you refine the art of risk-taking. It's a blend of knowledge and intuition, like a seasoned sailor adjusting the sails according to the wind, always aiming for the destination but ready to navigate the waves. Ultimately, remember that not taking any risk is often the biggest risk of all. Playing it too safe can lead to missed opportunities, whether in building wealth or pursuing personal dreams. Life, much like investing, isn't about eliminating risk, but about managing it wisely. So next time you find yourself on that proverbial diving board, take a deep breath, assess your surroundings, and make a decision that feels right for you. And perhaps reflect on this. Risk, in its essence, is the bridge between where you are and where you want to be. Embrace it wisely, and it could lead you to places you've only dreamed of.